Hello again, and if this is your first time watching, welcome. Today, we're talking about one of my favorite topics, which is the infinite banking concept. This is a strategy that we all have been doing since the company started, and it's something that we all do personally, and we're pretty good at it. Specifically in this video, we're going to be talking about the benefits of this concept and especially how it benefits Canadians. A lot of people come to us and they ask why they should use this concept for their savings. Well, depending on your situation, there are many reasons why this strategy can work for you. The strategy also might not be a good idea for you right now, and that's okay. It's really specific and it works for the right types of people, and it doesn't make sense for everybody. So let's begin with the simplest question, right? What is it? What is infinite banking? So if you've seen our other videos, you're probably at least a little bit familiar with the concept. And then for all our new viewers, here's a very quick rundown. It's a really old strategy that used to only be available to rich people who could pay for the right advisors to set it up for them. And then now, with the internet and the democratization of information, we can share with way more people. You don't need millions of dollars and a big shot broker to set it up. Infinite banking uses an overfunded participating whole life insurance policy so that you can invest or finance the major purchases in your life, or do both. We use specially designed participating whole life insurance policies to provide very high CSV, which is a cash surrender value. The CSV is what's used as collateral to take loans against your policy. We also use this type of policy because it grows with a dividend from the life insurance company participating account. And then this allows the money that you put into the account to compound and to grow for the rest of your life like nothing else really. So some of the benefits are that your money grows inside the policy and that you have liquidity because you can take loans out against the policy to pay for other purchases and investments. If you want to learn more about the details, like really a lot of details about this concept, check out the other videos on our YouTube page. But here's what we're going to talk about right now. One is the loan to value ratio. One big benefit is that this strategy has a very high loan to value ratio, or LTV. Because the insurance policy that we set up for you is so secure, it works great as collateral. There's other forms of collateral like a real estate or stock portfolio that you can use to get loans, but they don't offer that high LTV. Right? So these things get you 50, 60, 70% loan to value. But with your participating whole life policy, we can often get you 80 or 90 or 100% loan to value at very competitive rates. You can borrow from the insurance company itself, or you can borrow from a bank. So you've got options. And then usually when we're setting up the lending at a bank, the numbers are around prime or prime plus 0.5, prime plus 1, which is a great interest rate. The next benefit is your ability to grow wealth with what we call stacking investments. We have a whole video on this, but essentially you can earn twice on the same dollar if you do it the way we show you. So as I said before, the participating policy earns a dividend every year from the insurance company. So the collateral that you're using for your loan grows. So today in 2022, the dividend from different types of companies is between 5.5 and 6.5%. And these dividends are very consistent. All of the companies that we work with in Canada have been paying dividends to policyholders for more than 100 years. So now I'm not allowed to guarantee that they're going to pay a dividend in the future, but these policies are generally built around having a dividend, and the consistent track record of paying dividends for more than 100 years makes me feel pretty confident that the insurance company par accounts are going to continue to pay dividends. Because you can use your participating whole life policy for a loan without actually withdrawing the funds from the policy, you can compound that dividend growth inside forever. And then now when you take a loan against the policy and invest it, well, hopefully you make good investments and then those grow too. So you're effectively earning twice on every dollar that you put in your policy, right? So first with the dividend inside, and then second with whatever investment that you're making with your loan money outside. And you can invest in whatever you want. Our clients are generally investing in things like the stock market, real estate. They invest back in their business or someone else's business or whatever. Third piece that we want to talk about is business owners and liquidity, right? So for the business owners, the liquidity of infinite banking is a big attraction. Many of our clients need insurance in the first place, and they have money sitting in retained earnings in their company. And often that money is not invested, and the business owners want it to grow. So what we can do is we can set up these types of policies with your corporate earnings inside usually a holding company, And when we do this for business owners, one of the most common questions that we get asked is how easy is it to access cash from the policy? So obviously as a business owner, you need to tap into your earnings for all sorts of things like growth or salaries or inventory or buying a new machine or a truck or whatever you want. And a big benefit is that you can easily and quickly access the funds in your policy without losing the compounding effect of the dividend. And one of the quickest ways to access the cash is through what's called an insurance company policy loan. So in fact, the insurance company actually has to give you that loan if you ask for it. And it's super simple. You fill out a one-page form, you send it to the company, and once they review it, they send you the money. Usually you can get this in 2 to 3 days if you're doing direct deposit, and in 7 to 10 days if you request a check, but really nobody requests checks anymore. So there's other ways to take a loan against your policy. And if you want to learn more details about that, you can check out our other video here on YouTube. It's called Leveraging Whole Life Insurance for a Loan, and talks about a lot of different ways to do it. A fourth thing we want to talk about is the tax deferral on the growth that's inside. So the big benefit here is that the growth in the policy is tax deferred. So not paying taxes on the growth inside your policy really accelerates your compounding over time. And since you're leaving the money in the policy and taking loans out to access the value, you never lose that compound effect. And depending on how you take loans against the policy, most of the money that you take out against your policy can be tax-free. So I'm not an accountant. This is not accounting advice. So you should ask your accountant if he or she can tell you the same thing that I just told you in this video. If they don't know, tell them to call us and we will point them in the right direction to answer any questions that they have. Obviously, we're not going to tell them what to do, but we can guide them to where they need to go look. And the fifth thing is that you probably need life insurance anyways, right? So the last benefit of the infinite banking is the most obvious. You need life insurance. So if you have a family or you own your house, you've got a big mortgage, you have a business, these are all things that generally you need life insurance to protect against. This is a great way to get the insurance coverage you need while still putting your money to work and keeping liquidity so that you're not tied up in paying large premiums. We've got a great video on our YouTube with Billy Joe McInnes from Manulife Bank, where he talks about this really more in depth. It's on our channel and it'll probably come up for you in the algorithm when this video is over. And if it doesn't, then just search it. But at the end of it all, life insurance in Canada, it pays out tax-free. So depending on how we set it up, it can pay to your company or to a trust or your family. We'll work with you to set that up correctly up front. And there's also lots of flexibility to make change as your life situation changes. This added benefit of infinite banking ensures that you, your family, and your business are properly covered if anything happens to you. So that's it, really, the 5 big benefits of infinite banking for Canadians. Please like this, comment if you have any questions, or subscribe to our channel. And if you want to learn more about how infinite banking can work for you, or if you want us to run really specific numbers for your situation, fill out the contact form on our website. The link is below this video right now, and we'll set up a free consultation. It's super simple. When you send that email, it comes to me, and I'll send you a link back so that you can book a time in our calendar. Thanks a lot for watching, and I will see you on the next video.